Hey everyone, buckle up because we're talking about something huge today. The U.S. economy heading into 2026. As we close out 2025, wow, what a ride it's been. Think government shutdown drama, new tariffs shaking things up, and inflation that just won't quit entirely. But guess what? The U.S. economy has been an absolute beast. Resilient doesn't even cover it. Just look at this. Third quarter GDP blasted off at 4.3% annualized. That's powerhouse level. Driven by Americans spending like champs, exports surging, and government stepping in big. Fourth quarter? Atlanta Fed's latest nowcast says around 3%. Overall, for 2025, we're landing at a solid 1.9% to 2% growth. Not too shabby, right? So the big question, what are the experts forecasting for 2026? Is it boom, bust, or steady sail? Let's dive in. You're going to like this. All right, drum roll, please. The consensus from the smartest minds out there? Solid, steady growth around 2% for 2026. Not fireworks everyday explosive, but reliable. And that's exciting in today's world. Here's the breakdown. Philadelphia Fed and Blue Chip Pros, 1.8% to 1.9%. Deloitte, 1.9%. And they're pumped about AI pouring fuel on business investment. CBO says 1.8% as things cool a bit, but stay stable. Morgan Stanley, 1.8% next year, climbing to 2% in 2027 thanks to AI productivity magic. Goldman Sachs is the optimist in the room, 2.6%. They see tariffs fading, possible tax cuts, and more Fed rate relief. Others like RSM around 2.2%, with fiscal boosts and deregulation kicking in. Bloomberg average right around 2%. And the big drivers? AI is the superstar here. Massive investments in data centers and tech capex. Plus, easier money conditions. Risks, sure. Higher tariffs could spike prices, and immigration curbs might tighten labor and spending. But here's the best part. Almost no one sees a recession. We're talking extended soft landing, the economy gliding in smoothly. How cool is that after all the doom predictions? Now, inflation, the word that kept us up at night. Is it finally behaving? Kinda. It's sticky but heading down toward the Fed's 2% goal. Core PCE expected 2.5% to 2.7% in 2026, maybe early bumps from tariffs. CPI could nudge to 2.9%. Why sticky? Tariffs, wealthy folks still spending big, and AI data centers guzzling energy like crazy. But good news, slower wage growth is cooling things off. Labor market super tight, but easing gently. Unemployment ticking up to 4.4% to 4.5% from low 4% now. Job ads slowing to 50K, 125K a month. No mass layoffs, just smarter hiring with AI changing the game. Wages cooling to 3% to 3.5%, keeping spending alive without supercharging prices. It's balanced, cooling without crashing. Feels sustainable, doesn't it? Fed watch time. They've already cut to 3.5% to 3.75%. For 2026, expect just 1 to 2 more cuts, landing around 3% to 3.5%. FOMC dots point to 3.4% median by year-end. 10-year Treasury chilling near 3.9% to 4.2%. Why so cautious? Growth is strong, inflation stubborn. No need to slam the gas. But if jobs soften more, they'll ease faster. Smart steering ahead. So, bottom line, 2026 looks sturdy. About 2% growth, AI upside, modest rate relief, gentle cooling in jobs and prices. The U.S. economy? Resilient, innovative, dodging the big pitfalls. But hey, uncertainties lurk, trade policies, big deficits, global drama. Stay tuned. What do you think? Optimistic for 2026 or watching the risks? Drop your thoughts below. I can't wait to hear. Thanks for joining. See you next time.